Hello, Warriors. Hope everyone had a great holiday session. Hope everyone's doing okay today with how markets came in. Really explosive moves in precious metals. And I want to start with gold before I move to FX. So I was looking for a third drive, and we got more than a third drive. We have a throw over here, and markets can terminate a move once it closes back within the channel, which is going to come in around 22.48. It's only a few bucks away. So I'm believing that we're putting in a high here in gold. Silver also taking off, coming off a bit here. Part of this could be the unwinding of the gold silver ratio, which has been in a straight line to the upside for the last, I don't know, back towards it looks like the 18th of last month in March. So they may be unwinding that spread, and that could be what's behind uh, the silver coming back. I still think silver is a relative weakness. Could be short silver for a tactical trade, a scalp only, low margin. Could even look at these trades as a hedge against your long minor positions, which I'm sure are higher as well on this news. Let's see how much. So instead of selling your stocks, you could get short some of the physical and hedge your positions in the metals, in the miners. Here's Newmont. We're starting to put in red candles here. Let's take a look at the silver shares, which have also been very explosive. Here's SILJ over 10, kind of really not diverging. I bet AG is. No, AG isn't. Here's EK. There's a divergence there. What a run from 140 to 260 about. So that could be a hedge for your miners. This even looks weaker for Tuna. So that's what I'm recommending for a trade, not a position, but for a trade. So let's get back to really what I think is going to be behind gold coming back down is they're not going to be able to ignore the rise in yields that we're getting today. It's affecting the dollar a bit. Dollar's stronger, but gold has rallied with a strong dollar, stable dollar for a couple of weeks. But to me, this looks like this was just a normal pullback after this advance we had from 405. Let's put up the daily so you get an idea of where yields can go to. That this was just a normal pullback and we start getting back through this 435 level. I think we could trade up towards in the 450s, maybe 460 coming up. A lot of that's going to hang on what happens on the non-farm payrolls on Friday. But this looks like almost an inverted head and shoulders formation. Here's a shoulder. I'm not a big believer in them being continuation formations, but I've also seen them work. So, this low was 404, 434, tack on 30 over 434 gives you 465. I don't believe that the metals will discount that. TLT really taken a knock. It looked like they were trying to turn. And now the move, I've had this dot here for a few weeks. Going back to my interview last Monday, I put the dot in with Real Vision so they could see what the potential target is on the long bond. So that's down there around 89 to 90. And I don't think that the market will, the gold market and the dollar are going to reverse under that type of yield differentials that are dealing because there is no interest paid on gold. So let's get back to the euro last Monday. I said any bounce is just corrective, and it was. So here was the bounce, wasn't much. And then we just were declining to new lows. We're getting some divergence. We get any other kind of bounce, maybe back towards, 108, 108.20. I don't even know if that's going to happen. My targets are still on course for under 106. The pound is on the verge of breaking. This looks like some type of flag, just a continuation formation. So from 28 to the low here was 25.75, so that's 2.25. That's going to take you to 23.40. That measures. That's the move I was looking for. Right now, Aussie's holding up the best, and I still think that we're going to see the low 63s. I updated the return line on Aussie, and it's coming in just a shade under 63, which is still going to be above this low and well above the generational low that you could see here. So maybe the break in gold will finish off this Aussie break. I don't believe we're going back to 61, 69. So that will also be something that I'm going to be paying attention to. The Japanese are going to be challenged. They're going to have to come in and spend some money to cap this. If you look at the weekly chart, this is a very important area. I took a shot at the short side at 51.50, took partial profit stops at 220. So, it'll be a 30 pip loss. And I'm going to hang in there just in case they are desperate enough for intervention. Looking at the stock market, we were up about 24 earlier in the day. We all know how long in the tooth the stock market is. We're diverging on the 4-hour up here, but there is a 1.618 at 53.40. We'll see if we could do that. Right now it's ignoring yields, and NASDAQ is really flying, and we should make new highs in NASDAQ as well. We'll see what happens there. And even with all this strength, my preferred short, Apple's looking pretty lousy. I thought with last week I covered shorts there. We'll see if we could get one more pop here. I was hoping for maybe this from here back to 180 into the eclipse on the 8th, but doesn't look like that's going to happen. I'm currently flat. I guess if Apple's going to crash right now, I won't participate. And let's take a quick look at the energy complex. Nat gas is exploding today. So far we have put in a higher low, and Mike says that it's almost a contrarian move to when stocks are bad, people gravitate towards natural gas. So this could be a bottom. I thought we might challenge it, but after these long weekends, this looks pretty good. You could be wrong under the low. WTI hasn't done anything wrong yet to negate this move. We need closes back under 78. But I would say the thing I think is the best risk reward right now, and gold, if you sold gold during the broadcast, you're already making money. If you sold silver at the beginning of my broadcast, you're making money. I still don't think it's late, and I think there'll be great hedges for your long miner positions. I think we'll be able to buy the miners cheaper. I think silver can pull back towards this 23.5 to 23.20 level, and believe that gold could pull back to this breakout right around 2090. You also have a 50-day moving average coming in around the same level. So that's $150 from here, $160 from here. And the throw over, especially if we close under this line, would be the signal with stops over the high of the day. So good hunting, some nice contrarian trades out there in the metals. Still not sure what to do with risk, and we should have a good week. Lots of numbers, NFP being the most important number. If we get a weak number in the NFP, it may not be necessarily bullish, the market, because that might mean that we're starting to weaken. So we'll see what happens. 53.45 is still a possibility in the S&Ps. If that happens, maybe there'll be better levels to short Apple. And Microsoft looks like we should put in maybe a new high for a 3. We have a 2 here. NVIDIA still looks like this was just consolidation, and we should get a new high. This time it might diverge. AMD has been under pressure for a while. Do your fib work from here to here and look for sales. Perhaps all we got is a failing rally in AMD, and this was one of the superstars that we had over the last 4 months. So new highs in NVIDIA, failing rally in AMD. Remember, don't just count your pips, count your blessings, and I'll see you in the room. Adios.